Achieving success in the stock market requires a combination of knowledge, strategy, discipline, and patience. Here are some top tips for guiding yourself. First, educate yourself. Understand basics. Learn the fundamentals of stock market, how they work, and the factors that drive stock prices. Stay informed. Keep up with financial news, trends, and global events that could impact the market. Second, invest for the long term. Patience pays. The stock market trends to reward long term investors. Avoid trying to time the market. Instead, invest with a horizon of at least 5 to 10 years. Compound interest. Allow your investments to grow over time, benefiting from compound returns. Third, diversify your portfolio. Don't put all your money in one stock or sector. A well diversified portfolio across sectors, industries, and even asset classes can reduce risk. These offer broad market exposure, which can stabilize returns. Fourth, understand risk tolerance. Know yourself. Assess your risk tolerance before investing. High risk investments may have the potential for higher returns, but you must be comfortable with potential losses. Balance growth and safety. Young investors may take more risks, while older investors should focus more on preserving capital. Fifth, stick to a strategy. Create a plan. Define your investment goals, time horizon, and risk tolerance. Decide on a strategy: value investing, growth investing, dividend investing, etc., and stick to it. Avoid emotional decisions. Market fluctuations are normal. Don't let fear or greed drive your investment decisions. Sixth, monitor and review regularly. Check performance. Periodically review your portfolio to ensure it aligns with your goals. Adjust if needed, but avoid constant changes due to short-term market movements. 7. Avoid speculative stocks. Stick to quality. Avoid chasing speculative or hot stocks, which can be highly volatile and risky. Focus on strong companies with good track records, sustainable business models, and solid financials. 8. Stay disciplined during market volatility. Don't panic sell. Volatility is part of the stock market. Stay calm during market downturns and avoid panic selling. 9. Use dollar cost averaging. Invest regularly. Dollar cost averaging involves consistently investing a fixed amount, regardless of market conditions. This strategy helps reduce the impact of market volatility and avoids emotional market timing. 10. Leverage dividends. Reinvest dividends. Consider reinvesting dividends to compound growth over time. Stocks that pay consistent dividends can provide a steady income stream and long-term growths. Success in the stock market is a marathon, not a sprint. With the right strategy, patience, and ongoing education, you can navigate the market more effectively.